What is going on, investors? Hopefully you guys are doing well out there. Today we had both Coca-Cola and Pepsi report their earnings before the bell, and so I decided to put them into a head-to-head stock comparison video for you. Now, I will have timestamps down below if you just want to watch the Coca-Cola segment, if you just want to watch the Pepsi. I will bounce around a little bit between the two, but if you just wanted to watch one, you could. Now, the first thing that I want to stress is this is not necessarily a competition between the two. Don't look at investing like I can only invest in Coke and I can only invest in Pepsi. In fact, a lot of what I'm going to talk about on today's video is how you can absolutely invest in both of these companies because they're extraordinarily similar, and if you can get them both at the right price, you can absolutely have very, very good winning investments. Now, Coca-Cola over the last year up nicely, 22%. When we look at this from a technical perspective, this thing's gone sort of parabolic, okay? This thing's on a big old upward channel. We'll talk about what that means from a technical perspective. Now, Coca-Cola came in with their revenue, $9.5 billion. That's 10.5% growth year over year. It's funny when we come over and look at Pepsi, we got very similar growth, about 12% on that top line. Now, the company is expecting to grow their organic revenue. So these companies, they both kind of report this organic revenue. This is existing companies, I believe, companies that have been in their umbrella for more than 12 months. As we know, what these companies do is they have so much distribution that they don't really start up a lot of their own brands. What they do is they allow other startups to spend all that money, get some customers, get a little bit of distribution, and then Coca-Cola and Pepsi actually come in there and buy them out. It's a great strategy when you have a dominant market position and then regulators on top of that allow you to execute on that strategy, because we see this in big tech. Look, Snapchat couldn't be bought by Facebook. These companies couldn't consolidate all into one umbrella, but for some reason regulators allow it kind of in the snack food and beverage space. So the Coca-Cola, what they do is they show you for the upcoming year expecting between 7 to 8% organic growth. Obviously, they might grow as well by acquiring some other brands and some other properties to roll up into the umbrella of the Coca-Cola company. Now, to direct compare the two companies, boy, they have converged very nicely. We've got a price to earnings over the last year with Coke in the orange line and Pepsi fittingly being in blue. Both companies are trading right now at about 30 times earnings. Just absolutely amazing. Now, is that cheap? No, these companies have actually been quite a bit cheaper. They've been down 24, 25 times sales more recently. So we are paying a premium for that. But when we get over to these earnings, this is Coca-Cola, we'll see a reason probably why. Okay, so we have these earnings on the top line. We went from 8.6 up to 9.5-ish. That's a good 10% move. Cost of goods sold now also increased. We talk a lot about inflation. Inflation hits these companies kind of in two ways. One, it does benefit them because they can pass these price increases down to the customers, but in the same line, they are seeing increased cost on shipping and the raw materials that go into their products. We see that up 14%. So our gross profit just went up just 7% from 5 billion up to 5.3. This is on a quarterly basis for Coca-Cola. We'll look at it from a yearly basis here in a moment. What Coca-Cola noted during the call was the selling general administrative. They had a lot of advertising expenses pulled forward in this quarter, and you see a big gigantic 29% increase in the SG&A costs from 2.6 billion up to 3.3. That really impacted our operating income in a negative way. Notice that despite the increase in operating revenues, our operating income actually went down 28%, down from 2.3 down to 1.6. Again, primarily impacted by the fact that you had a 29% growth on the SG&A line, but also a little bit the cost of goods sold actually increased by about 14%, which exceeded our sales as well. You flow all the way down to the net income number, and this company is still doing very, very well, okay? Over $2.4 billion worth of net income. They had about $1 billion of other income. My guess is some kind of investment got realized over the last year, and so they were able to recognize that on the net income side. So despite operating profits declining 28%, our net income actually went up by 66%. So when you're reading EPS, when you're reading price to earnings ratios, understand that that pulls from the net income number all the way down here, and that is impacted by other things not related to operating Coca-Cola. That's why when you analyze a company, it could be any company, it doesn't have to be Coca-Cola, any company, I love to stop right here at the operating income, okay? Because this gives you a true sense of what's going on with the business right at the current moment, but it also gives you a sense what needs to improve in the future for Coca-Cola. They probably will keep this advertising expenses. Those will normalize a little bit. We should see this normalize. And then if you can continue to grow revenues, we'll start to grow these operating profits as well. Also, you got to figure year-over-year comps on that operating side next year at this time probably will be a pretty comfortable lap if they don't have a lot of expenses roll over into next year. Now, a little bit different story for the full year because we do see that revenues grew by 17%, our cost of goods by 14%, our gross profit grew by 19%, our operating income though grew 15%. Despite the increase by 25% on this selling general administrative side, they were able to squeeze out a little bit more operating income. So that gives you a sense when you look at the full year that it could be kind of a one-off quarter type thing. And certainly when we look at the reaction of the stock is basically at highs that we have not seen in years for Coca-Cola. I mean, it is way up at the top end of a channel, and boy, it doesn't look like it wants to slow down anytime soon. Really strong operating income over here, $9 billion up to this 10.3. You come down to net income, really strong print down there, $9.7 billion on that. Now, from a technical perspective with Coca-Cola, I just wanted to draw some channel lines just to give you how predictable this stock is, okay? This goes all the way back to about 2013, so really a 9-year view. It was in a really nice channel from about kind of the low 40s up to about $50 per share. We had a big old spike before the health situation, and this thing like crashed and burned, but now it's back in an even steeper upward channel. I mean, this thing is rocketed from 40 all the way up to 60. Now, when you're in these channels, what is the obvious thing to do? The obvious thing to do is not draw a crazy line like that, but actually wait for this thing to pull back a little bit. So we're looking for a red candle, pull back to the bottom end of the channel. If it does it pretty quickly over at Coca-Cola, you'd be back down at $60 per share. Do you really want to pinch pennies on these things? I don't know, but when it's this, I mean, we've got a 10-year chart, and this stock is so predictable. It goes to the top of the channel, comes back down, goes to the top of the channel, back down, just seesaws back and forth. Same thing. We're just seesawing up in this channel. Sure, I'd like to wait for this one to pull back. It could pull back to the 50s, to the 58, even all the way. The previous lows on this one, or the previous highs, are all the way back down to 57. That's $4 off this share price. So I wouldn't mind waiting on this one. You could pick it up at the bottom end of that channel. Now, let's shift our focus over to Pepsi. What I wanted to also point out with the two companies is right now you're getting a very similar yield on both of these companies. You're getting a 2.5% dividend yield on Coca-Cola. Likely doesn't factor in today's drops with Pepsi. Excuse me, I think I said Coca-Cola. You're getting a 2.5% yield on Pepsi, and then on Coca-Cola, you're getting about a 2.71% yield on Coca-Cola. Very similar dividend yields. Also, look over the last year, this stock, Pepsi, is up 23%. And guess what? Coca-Cola is up basically 23%. It's amazing how similar these companies are. Although when we dive into Pepsi's revenues and their earnings, it's a little bit different. Notice the revenues came in at $25.25 billion with Pepsi. That's a significant amount of revenues on a quarterly basis over Coca-Cola, which just had $9.5 billion worth of revenue, but similar growth rate, 12.4% year-over-year growth rate. We talked about that organic revenue growth with Coca-Cola coming in that 8% range. Looks like Pepsi's going to come in at that 6% range. Now, when we jump over to Pepsi, we see strong revenue growth on this top side, and we paint an almost identical story. It's so crazy to what's going on over at Pepsi on a quarterly basis. So despite nice revenue growth on that top side, we did keep our cost of sales in check to a certain degree, had increasing gross profit from $12 billion up to this $13 billion, but our SG&A expenses ballooned a little bit from 9.2 up to 10.5. That's a $1.3 billion increase year over year on a quarterly basis, and that negatively impacted our operating profits down from 2.8 billion down to this we'll call it 2.5, $2.6 billion range. You flow all the way down to net income. They didn't have, Coke was benefited by some other income, maybe a distribution from a business that they disposed of. Well, we didn't get that over at Pepsi. So our net income actually went down from 1.8 to $1.3 billion. On the year end, slightly different story, but very steady company. On the net income side, you went from 7.1 up to 7.6 billion. On the operating side, you went from 10 billion up to 11 billion. Just your steady Eddie companies when it comes to Coke and Pepsi in particular. Now, what we need to understand about Pepsi though, is when we say Pepsi, we think about Pepsi, the drink, but I want to show you that yes, you get significant amount of revenues from the Pepsi beverages, okay? In fact, in the quarter, 7.6 billion of it, of the $25 billion worth of revenue, 7.6, the majority of the revenues actually comes from the beverages. And then you look for the full year, off of $80 billion worth of revenue, 25 billion comes from Pepsi. But here's the really interesting thing about this company is the vast majority of the profits actually comes from Frito-Lay, the snack foods, the chips. Notice in the quarter, we had $6.1 billion worth of revenue. Look at this, $1.6 billion worth of profits. You might ask yourself, what did the beverage company make? Well, 7.6 billion. This is just Pepsi in North America. You could throw in Latin America and Europe as well, and you get to a larger number, but you get Pepsi off of $7.6 billion worth of revenue, which far exceeds the Frito-Lay revenue by about 1.5 billion. Take a look at your operating profit. Down here is your profits, okay? Not even $500 million off of this 7.6 billion. Look in Latin America, 2.8 billion. You made 400 million. So in totality, it's a significant amount of profits, but this Frito-Lay business is wildly profitable. Okay, look for the full year, $19.6 billion worth of revenue, operating profits of $5.6 billion. That Frito-Lay business is the bread and butter when it comes to Pepsi. You got to hope that people continue to eat chips when it comes to Pepsi. Now, from a technical perspective, this thing has gone parabolic as well. Okay, just like Coke, this thing is actually traded in pretty predictable channels. Okay, the stock goes up, it goes back down in a channel. Both of them had these major drops back in March, like pretty much every stock, and it's recovered nicely. Now this one's actually a little bit different. I mean, these are so steep on these uptrends that with these ones, with Pepsi, a little bit different story. We're actually towards the bottom of the channel where I showed you Coke. Coke is actually at the top of a channel. I think you want to wait for that one to pull back. Pepsi's actually towards the bottom end of the channel, and if you believe this upper trend line's going to continue to stay intact, I just want to just remind you, this is so steep, okay? I have to imagine this is going to flatten out at some point, because I just showed you this company is growing, but it's not, it's not a tech stock, okay? It's growing its operating profits, it's growing its net income, it pays a dividend, it is insulated to a certain degree from inflation because they're probably going to be able to pass some of those costs down to the customer, and you do get that dividend as a little bit of a margin for safety. But I have to imagine that we're going to start to flatten out a little bit on this, okay? I'm not saying that it's not going to remain in an uptrend. In fact, this one would basically have broken its uptrend if you break down significantly below this upper trend line. Then all of a sudden that tells you that this trend line is in fact over, and you'd likely expect some kind of sideways consolidation with this company at some point. But right now, at the given moment, if you think this upper trend line is intact, well, you're approaching areas where you can buy Pepsi in the 165 to 169 range. All things being considered, both companies, as you'd expect, wildly profitable, very well-oiled machines over here at both of these companies. From an operating perspective, a net income perspective, both of them are growing at almost the identical rate on the top line and also projecting that organic revenue as well. These companies are just in lockstep with each other. And on top of that, you get the benefit that regulators allow these companies to buy up their competition, unlike other companies we see out there like mega cap tech and maybe energy and other resources out there. It's really interesting that they're allowed to do that, and as long as they're able to do that, these companies should continue to be able to grow not only organically, but by acquiring other brands that gather some market share, and all of a sudden they take them out in a buyout. So that was Coke and Pepsi. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.